Elliott wave Dow Jones trader is using a expanding triangle like a probe. Elliott wave Dow Jones trader is using a expanding triangle like a probe. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Elliott wave trading. Our website is www.24elliottwaves.com. The title of the video is Elliott wave Dow Jones trader is using a expanding triangle like a probe. Let's get started. I'm on the daily chart for Dow Jones index, all right, daily charts, and we can see that recently the moving average 50 dipped below the moving average 200. This is a major event in the financial market, all right. So the price went down, the market responded and sold the Dow Jones, and it went down big time, all right. But we notice also that before that the price was in a rising channel, all right, was bullish, and now the price, okay, it's a little bit out of the channel. So there was this first leg, okay, of the move down. Now we have, okay, the second leg that is formed of what we call the ABCDE, a chart pattern, okay. The ABCDE, a chart pattern, is a triangle, is a corrective, okay, wave. Okay, it's an Elliott wave, okay, correction. Usually take place during the fourth wave, but it also can take place during the B wave, B for Bravo, the B wave of the ABC corrective wave. Don't get confused, all right? Now, the key point that I want traders to understand is that if we have a pattern, okay, a pattern being formed, and we see the expanding triangle, there is a high chance that the expanding triangle is alerting us that the last phase of the pattern is about to be completed. Now, I want you to understand this clearly, all right? So if I have a pattern that is formed of three patterns, that is 1, 2, 3, and I see, okay, expanding, okay, triangle here, it's alerting me that the last part of this pattern, okay, is about to be completed. All right. Now, some trader will learn that by heart, and they will stick to it, and they want to apply it like a science that 1 + 1 = C, and this is what the theory stated. Don't get into that mindset. All right. So usually we see that during the multi-wave, which is formed of 5 waves, that the expanding triangle, or most of the corrective, okay, most of the triangle, the Elliott wave corrective triangle, will take place during the 4th Elliott wave, either in the uptrend or downtrend. Now, the key thing that we are trying to do here is to simplify the Elliott wave principle without diluting it. So this is a pattern that we know that during the multi-wave, we have 5 waves. 1, 2, 3, 4, 5. Okay, everybody know that pattern. It's a pattern, yes or no? Okay, so in a downtrend, the opposite is also true. It's a pattern, okay? Now, in downtrend, we have again 1, 2, 3, 4, 5, okay? I hope you like my drawing. All right, that's not my strong point, so I'm trying my best. All right. In a downtrend, again, the multi-waves formed of first wave, second wave, third wave, fourth wave, and the fifth wave, yes or no, all right? Very often, we will see an expanding triangle or a corrective triangle, an Elliott wave corrective triangle, very often will appear in the fourth wave. I did not say always, but very often, all right? Now, the general rule, or if we want to establish a market stable data, is that whenever we see an expanding triangle, it's alerting us that a pattern that is being formed is about to be completed, okay? So you will see just before the last phase of a pattern. So if I draw a funny pattern like this, okay, suppose we know a pattern that is something like this, okay? All right, just think of it as it's a funny pattern that everybody knows. All right, okay, think of it like that, okay? We are just assuming, okay? If we see an expanding, okay, triangle here, is alerting that yes, the pattern that we knew about before is about to be completed. So we will expect the last leg of the pattern to be completed. That's why very often you'll see the expanding triangle in the fourth wave. So there are various Elliott wave patterns, okay, like the zigzag pattern. So it's formed of three, isn't it? 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. But it's ABC in fact. So if we see the expanding triangle here, it's alerting us that the last leg of the zigzag pattern is about to be completed. All right? Okay? Or we have a flat correction. We see the A, okay, B, okay, and during a C move, okay, all right, so flat correction, 1, 2, 3, 1, 2, 3. Now, if you have 1, 2, 3, 4, and during the fourth, we see an expanding triangle, we know that, okay, the fifth part of the C part of our flat correction is about to be completed. Don't get confused. Go to go to 2-4 Elliott wave and check out, okay, the flat correction. Or don't get confused, okay? But the key point I want you to understand that the expanding Elliott wave, okay, triangle, we alert us that a last part of a pattern is about to be completed. So every other pattern that you know, when you see the expanding the triangle, be aware that there is a high chance. Remember, there's a high chance. Now, why am I talking about this? Okay, so we are trying to forecast the market. That's why we use the Elliott wave pattern. That's why we use the expanding triangle. Okay, especially the running triangles is a powerful tool to forecast the market. But when we forecast the market, okay, we need to be gentle. So we are expecting something. So the forecast is an expectation. It's a projection. Right? We are expecting something to take place. Remember, you are not the only person in the market. Okay, there are different types of market participants. If you ignore them and you think that you are the king of the market, what you are expecting is exactly what is going to take place, you may be, okay, surprised. Okay, so we are expecting something, we are projecting something, okay, we are forecasting that there is a high chance, high probability that this event will take place in the financial markets. Now we will note it down and we will now wait. Okay, we use a top-down trading method to enter the market. This allows us to, in case we are wrong, we cannot be fooled. We cannot be fooled if we are using a top-down trading method. All right, this is the key. If you use a top-down trading method, you will not be fooled. You will know that, okay, the music is changing, but you will not be fooled completely. All right. So here on the daily chart, so now we know what is an expanding triangle, the internal waves of that pattern, which we call also the ABCDE, all right, don't get confused because we have ABC chart pattern, we have ABCD chart pattern, now we are talking about ABCDE, corrective wave, which is a triangle, okay, so we have a different type of triangle, okay, the descending triangle, the ascending triangle, all right, the contracting triangle, and also the expanding triangle. And the internal waves of the Elliott wave triangle, we have free, 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 free. So if you think this is a bit strange, okay, all right, maybe you think that I'm speaking German instead of English, all right, the gates, by the way. So I'm not speaking German here, I'm speaking English. If you don't understand free, 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 all right, now you need to, I will refer you to a video that we recorded recently. I will put it in the description section, okay. The title of that video is called How to Trade Elliott Wave Corrective Triangle from a Different Angle. So check it out in the description section. So for the Dow Jones, we see a move down, and now an expanding triangle is being formed. As you can see, if I show you, okay, so now we know the internal waves of, okay, a triangle, of the Elliott wave corrective triangle. Free. It's 5 times, okay? So let me show you one of the drawing here. Okay, I hope you can see clearly here on your chart. So you can see this is an expanding triangle. It's probably went up 1, 2, 3. That's the first free. It went down again 1, 2, 3. That's the second free. And then you went up again 1, 2, 3. That's the third free. And then we have the fourth free 1, 2, 3, followed by the fifth free 1, 2, 3. That's why we say A, B, C, D, E. The A being subdivided into 3, the B also C, D, E, all subdivided into 3 subwaves. And the key point I want you to remember, so you may start adopting the mindset of the best Elliott wave practitioner, is that the expanding Elliott wave triangle usually will alert us about the last move of a pattern. If you get that one right, you will be all right, okay? Now, the challenge comes when it comes to identify the pattern, because as you can see here, it's clearly neat and beautiful. Everybody can see that it's ABCDE on this chart here. But if we go to the real chart, you can see that things can become a bit messy, okay? Now, that's where traders get into argument. There's sometimes disagreement between the wave count, okay? But I've done my homework, and the A, okay, pay attention carefully, because you can see the price drop down. That's the first leg of a pattern being formed, and now we have A, okay? But if I'm going to switch time later, I'm on a daily chart now, so we'll go to the weekly chart, and you'll see that it's not that clear, all right? It's not that clear. Well, we remember free, all right? So, but stay with me. So this is the A, corrective wave of our ABCDE. So the A from here to here, okay? Then we have the B from here down to this level here. And then we have the C from here to here. Can you see all the three? It's not very clear. If you cannot see it on one time frame, you need to go to the lower time frame. Sometimes you may also go to the lower time frame and you can't see it. It's hidden. There's nothing you can do about it. Okay? So A, B, C, D, E. All right? So this is the E from here to here. The E part of our ABCDE chart pattern, or the E part of our ABCDE triangle, expanding triangle, is not yet completed. The price is heading to the upper side of our expanding triangle. So our expectation is that the Dow Jones index will continue in the short term to go up to reach the level. Okay, there's a level here. Okay, first level 17042, that's the pink line here, up to the edge of the triangle in the zone of 17153. That zone. We are talking about zone 17153. So there's a high chance, our expectation that the Dow Jones will continue to go up into that zone, okay, right here, okay? And if it reaches that level, the pattern, the triangle will be completed. The ABCDE, okay, triangle will be completed, all right? And if it reaches, so first in the short term, our expectation that it will go up to reach this level. And after that, in the medium term, the Dow Jones has a high chance to come back down. This is what we are saying to traders, that the Dow Jones has a high chance to pull back to retest the level of 155.51, somewhere down here. So when it starts going down from here, this is our expectation. It will continue to go up. First target, okay, the ultimate target is this, is the edge of the expanding triangle here. But we will prefer the Dow Jones to revisit the level of 155.51, 155.51. that will make more sense to display a double bottom chart pattern here. Now I have been talking about our expectation. This is where trader get into trouble. Now our expectation is not what the market will do. So to avoid that we don't get into trouble, we will use a top-down trading method, because these are trading setup. So if the price is not doing what we are expecting, okay, using a top-down trading method, we allow us to navigate through the market. I will also put in the description section the link to a video that we call a multiple time, what is a multiple time frame trading method. Okay, so check it out. All right. So first expectation, Dow Jones has a high chance to go up, okay, to reach the edge of the triangle. And if we reach this zone, the area of a trader that have noticed this ABCDE expanding triangle will be looking for opportunity to sell Dow Jones here. And with that, if the market accepted that, if the market is bearish from this point, the price will continue to go down. First target is okay, the edge of the expanding triangle here, but the best support level is in the zone of 155.51. This is about an area where Dow Jones trader is using expanding triangle like a professional trader. Now, the next thing that I need to clarify here before trader get into trouble is this. We say that we have seen A, B, C, D, E, expanding triangle, which is an alien wave corrective wave formed of free. These are the internal waves. Okay. Now, if the price reaches this level, going into the mind of other traders. Okay. So this is what we are saying. You forecast the market, you're expecting something, you project something. All right. There's a high probability that one event will take place. But remember, we want to understand other traders. Other traders who see this, okay, will be expecting the price. There will be some orders placed here. Some bullish trader will place order here to buy the Dow Jones because they have seen the triangle, but they want to buy a breakout here. You see now, if you forget these traders, okay, you'll be saying, John, what is about Elliott wave? Elliott wave does not work. Elliott wave does work because it guides us to make the right decisions, all right? But it does not give us the power to manipulate the market, but it allows us to know exactly what's taking place in the market. So some bullish traders, investors, will place low displays with orders to buy. Now, where there are orders, the price will go there to fill these orders. So if, for instance, there are big orders being placed on the upper side of this expanding triangle, the price will go and fill these orders. Now, bringing us to the next thing that I need to say to you, if you go, for instance, okay, to the weekly chart, okay, because I'm on the daily chart now, this is very important, okay. If you go to the weekly chart, what do we see, my friend? We have, okay, you have too many lines on my chart. I need them, and I don't want to remove them, all right? You allow me to navigate through the market, okay? All right, so now, look carefully. On the weekly chart, we have a rising channel. You see the blue channel, okay? All right, pay attention, okay? The blue channel, we have a rising channel, okay? Now, the price D below the blue channel, okay? You see here, it D below it. Now, it's going back inside the channel again. So it went out of the blue channel. Can you see it? Can you see it? See, it went out of the blue channel. Now, it going back inside. Now, we have noticed using the area wave pattern an expanding triangle here, all right? Very often, all right, very often, the traders that are very, very arrogant are area wave traders, all right? Now, a lot of traders will agree with me. Now, we can be a little bit arrogant, but we need to be a little bit wiser, okay? This is what I'm saying here. This is what I'm communicating to traders. You know something, you have an edge, all right? But you are not the only person in the market, all right? Remember that. Okay, so now we know that we have an expanding triangle. We know the internal waves. We know the meaning of an expanding triangle. We can forecast what the price can do before it happens. But we don't want to go ahead, okay, before the price. And also we don't want to ignore other traders. That would be a wise thing to do. Otherwise, we are just very, very arrogant people. And some other trader will love to punish us, okay? Now, or will love to trade against us. So to avoid those kind of things, one thing you need to understand, the price went out of the blue channel. This is about the market pattern that we do not want to violate on any time frame. Our wave count can be wrong, our expectation can be null, but all right, one thing that we cannot afford to do is to violate the market pattern. So on a weekly chart, we have this beautiful, okay, rising channel. The price went out of the channel, but it's going back inside the channel. Why the price is going back inside the channel? So if I draw another line here, you will see, if I draw another channel, blue channel, the smaller one here, this is about the market pattern. This is what allows us to navigate through the market. So there was this smaller blue channel, the price was in it, now it's out of it. So we can say the medium-term trend is returning back to a bullish direction. So the price is going back up, yes or no? All right? But we are talking about corrective wave. So if the price does not find a resistance here on the edge of our expanding triangle as we are expecting, well, can happen if other traders place order here to buy, and these orders are big orders, all right? They are huge orders, and they are filled. What will happen? The price will continue, okay, to go up to retest the median line of the blue channel, the bigger blue channel. So draw the median line of the bigger blue channel on the weekly chart. In case there were orders that have been placed here, the price will continue to go up to retest the median line of the blue channel before finding a resistance there to come down. Okay? As always, do not assume anything, trade the price, and do not violate the market pattern on any time frame. Here we have this smaller blue channel, the price is out of that declining channel, is resuming, okay, the progression to the upside. Yes, there is an ABCDE corrective triangle. We are expecting the price to continue to go up to the edge of the expanding triangle, but we cannot afford to ignore or to violate the market pattern on any time frame. When one is using the Elliott wave theory or principle, one must consistently, okay, adhere to the three market pattern, the rising channel, the declining channel, and the horizontal channel. Without that, the wave theory will become useless. All right? So one will be using the wave theory to fight the market, which means trading against the market pattern instead of trading with the market pattern. So we want to align our Elliott wave forecast, our Elliott wave analysis with the market pattern. This will allow us, okay, to flow with the market instead of fighting the market. It makes sense? So remember what I've said today is very, very important. And also we have here the moving average 100. You see, this is the red line here. That's the moving 100. Remember, if the price does not continue all the way to the median line, sometime the price will just go poof very fast to retest the moving average 100. Bullish trend takes place above the moving average 100. Bearish trend takes place below the moving average 100. I will not say more than that. When it comes to moving averages, I have too many secrets, and I don't want to share all of them, okay? All right? It makes sense? All right? So now, if we go again, so this is the weekly chart, so we notice now. So let's go to the monthly chart. Okay, monthly chart. I want to see how long we have been talking now. 23 minutes, not too bad. We're going to wrap it up soon, so stay with me, okay? So on the monthly chart, you can see that it become clear. Our blue channel is clear, and the price just came out of it. And the month, look carefully, keep your eyes wide open, okay? All right, so you can see. So it went out of the blue channel. Now this candle, this is the month of October 2015. All right, you see here, the time in London is 49 minutes past 1 on the 8th of October 2015. So here we are. So you can see that, all right, the price going back inside is now above the level, a key level. You see, that's why I like my line on my chart. It's now above the key level, 167, okay, 85, okay? You remember? Okay, it's here. All right, the red line is a key level. The next key level is 17042, and after that we have a 17293, okay? You want to know the key level. It allows us to navigate through the market. You are trading Dow Jones, know your key levels. All right? Or you are trading any financial instrument, know your key levels. All right? It makes sense? Okay? So, to go back again to what I've said to trader before in another video, okay, is that it will be better. The Dow Jones will return to the upside, that's for sure. But we will prefer it to come back to revisit the level of 15551. That will make sense, okay? Then we have an orderly progression. But the market can continue to go up. If that's happened, it continues to go up without going back to the level of 15551, it will be in the rising channel for sure. And we will buy instead, okay? But the point I want to make is that for an orderly progression, it's better for the Dow Jones to go up a bit, as we're expecting it now, go up a bit, and then to pull back to complete the pattern that is being formed here, because we have an expanding triangle that is revealing to us that a last part of a pattern is about to be completed. In this case, we are looking at ABC chart pattern, and the B part of the ABC being an expanding, corrective wave. All right? So it's a correction taking place now, and the B part of that correction is what we are seeing now, which is an expanding triangle. So if the price does not respect our expanding triangle and it went all the way up, it's a bit of market distortion or a bit of market manipulation. A bit. All right? We can say that, okay? Because the price was in a rising channel. Now it come out. It's about to form, okay? ABC, okay? 1, 2, 3 down to revisit the level of 15551 before it will go back up to July 2016. That's our expectation. All right. The ultimate bullish target is here in the zone of 18822. That will be better to form ABC, revisit the level of 15551, and then go back out to the level of 111 to the level of 18822. That remains to be seen. It makes sense? All right. It makes sense? So we see now, this is an expanding triangle, okay? 3, 3, okay, that's 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 3, 3, 3, 3, 3. All right, so prior was going down, first leg down, big time, because moving average 50 goes below moving average 200, prior rush down. Now an expanding triangle has been formed, okay, on a daily chart. We are expecting another move down when the E is completed. So for today, for my day trading strategy, all right, as New York will open at 2:30 p.m. London time, I will be prepared to give priority to bullish signal, expecting a Dow Jones slowly but gradually, all right, not in a straight line. If price does not go up in a straight line every day, if it's going to go up every day, go up. No, it doesn't go up like that. You go up one day, maybe come back down next day, then next day go up. People say, John, you say it's going to go up, I went down today. Yes, keep your eye, okay, all right, so I'm trying to refresh, okay, your skills a bit, okay? So our expectation is that you continue to go up, because I say to trade that there's a high shot that you come back down to the level of 15551, all right? So now it's going down, so they're wondering what's going on, okay? What's going on? We don't want to violate the market pattern, all right? And this will help us make excellent decision. This is the end of this video about Elliott wave Dow Jones trader is using the expanding triangle like a pro. Okay, as a professional trader, okay, as somebody who wants to trade like a pro, all right, one wants to trade the price itself instead of the technical indicators. The technical indicators will give us the warning, but the price must confirm the warning by giving us what we call a direct signal. All technical indicators will giving us a warning. Okay, even we are using our Elliott wave pattern. The Elliott wave pattern will give us the warning, but we are following the price. Okay, the price. So we see a pattern being formed, which is an expanding triangle. The professional will place order. Some professional will place order above to buy right here, and some will place order below here to sell. Okay, all right. So we want to know what's going through the mind of professional traders, and the most important thing that can save us, our wave count, our wave analysis, is to align it all the time on every time frame with the market pattern. The internal waves of the expanding triangle is free. All right. The expanding the triangle is also called the ABCDE. okay, a pattern. These are corrective wave. A corrective wave is always correcting something. So whenever you see a corrective wave, you will ask the next question, what is it correcting? Here, what it is correcting is the first move down that brings the price out of the rising channel. Here, this move down. This is what is correcting. But the next thing that we learn from this video also is that an expanding triangle is very often, not always, okay? Not always, very often will alert us that the last part of a move, a pattern, is about to be completed. So there is a high chance that the Dow Jones will continue to go up to retest the upper side of the expanding triangle to complete the E wave of our ABCDE pattern, all right? And then from there, we'll expect the last part of that A, B, C being formed. So we have a bigger pattern being formed, which pattern is the ABC. So here, I'm going to have to show you here. So what's going on, okay? So we have a move down, you see here, this move down. Now we are having what? An expanding triangle. So I'm going to draw it like this, okay? So now we are having an expanding triangle, okay? And the expanding triangle is alerting us that the last part of a pattern is about to be completed. So when the price hits the edge of the triangle here, we will use what? A top-down trading method. We will not just sell like old-fashioned traders, assuming that it will definitely go down. No. They can be surprised if traders place order here, as I explained to you. All right, use a top-down trading method, and the last part will be another move down, forming, okay, ABCDE. So the triangle here is forming the ABC pattern. Okay, so the pattern that is being formed is A, B, C. Now, the B part of the ABC is now an expanding, okay, triangle. It's true. The expanding triangle is alerting us that the last part of the ABC is about to be completed. Once again, this is not an exact science. It's a guide, okay, that we follow to forecast or to project what the price is likely to do. This is our expectation. But there are other market participants in the market. We cannot afford to ignore, okay, the economy news, the market pattern, and other market participants. This is the best approach if one wants to use, okay, the area wave expanding triangle like a pro. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. If you have any comment, any suggestion, all right, put it in the comment section. I'm not saying to spam it and put that this video is great, but okay, I know, all right. Okay, so if you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our video, feel free to subscribe to our 24 Area Wave YouTube channel. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about an area wave Dow Jones trader is using, okay, expanding triangle like a pro. Speak to you soon.